Hi Shyam, have you attended the previous classes of business finance?
Yes, I did. Do you need any help?
Yes, absolutely. Actually, I have doubts in it and I did not attend its classes.
No issue. I will help you out. Let's start from this point of time only. Business is concerned with the production and distribution of goods and services for the satisfaction of needs of society. For carrying out various activities, business requires money. Finance, therefore, is called the lifeblood of any business. The requirements of funds by business to carry out its various activities is called business finance. The need for funds arises from the stage when an entrepreneur makes a decision to start a business. Some funds are needed immediately, say for the purchase of plant and machinery, furniture, and other fixed assets. Similarly, some funds are required for day-to-day operations, say to purchase raw materials, pay salaries to employees, etc. Also, when the business expands, it needs funds. The financial needs of a business can be categorized as follows. Fixed capital requirements. Working capital requirements. The amount of working capital required varies from one business concern to another depending on various factors. A business unit selling goods on credit or having a slow sales turnover.
This is really very helpful.
In case of proprietary and partnership concerns, the funds may be raised either from personal sources or borrowings from banks, friends, etc. In case of company form of organization, the different sources of business finance which are available may be categorized. The sources of funds can be categorized using different bases, that is, on the basis of the period, source of generation, and the ownership. A brief explanation of these classifications and the sources is provided as follows. Period basis. On the basis of period, the different sources of funds can be categorized into three parts. These are long-term sources, medium-term sources, and short-term sources. Ownership basis. On the basis of ownership, the sources can be classified into owner's funds and borrowed funds. Source of generation basis. Another basis of categorizing the sources of funds can be whether the funds are generated from within the organization or from external sources. A business can raise funds from various sources. Each of the source has unique characteristics, which must be properly understood so that the best available source of raising funds can be identified. There is not a single best source of funds for all organizations. Depending on the situation, purpose and cost, and associated risk, a choice may be made about the source to be used. Retained earnings. A company generally does not distribute all its earnings amongst the shareholders as dividends. A portion of the net earnings may be retained in the business for use in the future. This is known as retained earnings. Trade credit. Trade credit is the credit extended by one trader to another for the purchase of goods and services. Trade credit facilitates the purchase of supplies without immediate payment. Such credit appears in the records of the buyer of goods as sundry creditors or accounts payable. Factoring. Factoring is a financial service under which the factor renders various services which includes discounting of bills with or without recourse and collection of the client's debts. Providing information about creditworthiness of prospective clients, etc. Lease financing. A lease is a contractual agreement whereby one party, that is, the owner of an asset, grants the other party the right to use the asset in return for a periodic payment. Public deposits. The deposits that are raised by organizations directly from the public are known as public deposits. rates of interest offered on public deposits are usually higher than that offered on bank deposits. Commercial paper, CP. Commercial paper emerged as a source of short-term finance in our country in the early 90s. Commercial paper is an unsecured promissory note issued by a firm to raise funds for a short period, varying from 90 days to 364 days. Issue of shares. The capital obtained by issue of shares is known as share capital. The capital of a company is divided into small units called shares. Each share has its nominal value. Equity shares. Equity shares are the most important source of raising long-term capital by a company. Equity shares represent the ownership of a company, and thus the capital raised by issue of such shares is known as ownership capital or owner's funds. Equity share capital is a prerequisite to the creation of a company. Preference shares. The capital raised by issue of preference shares is called preference share capital. The preference shareholders enjoy a preferential position over equity shareholders in two ways. Receiving a fixed rate of dividend out of the net profits of the company before any dividend is declared for equity shareholders, and receiving their capital after the claims of the company's creditors have been settled at the time of liquidation. Debentures. Debentures are an important instrument for raising long-term debt capital. A company can raise funds through issue of debentures, which bear a fixed rate of interest. The debenture issued by a company is an acknowledgement that the company has borrowed a certain amount of money which it promises to repay at a future date. Commercial banks. Commercial banks occupy a vital position as they provide funds for different purposes as well as for different time periods. Banks extend loans to firms of all sizes and in many ways, like cash credits, overdrafts, term loans, purchase or discounting of bills, and issue of letter of credit. The rate of interest charged by banks depend on various factors, such as the characteristics of the firm and the level of interest rates in the economy. Financial institutions. The government has established a number of financial institutions all over the country to provide finance to business organizations. These institutions are established by the central as well as state governments. They provide both owned capital and loan capital for long and medium-term requirements and supplement the traditional financial agencies like commercial banks. There are various avenues for organizations to raise funds internationally. With the opening of an economy and the operations of the business organizations becoming global, Indian companies have an access to funds in global capital market. Various international sources from where funds may be generated include commercial banks, international agencies and development banks, international capital markets, global depository receipts (GDRs), American depository receipts (ADRs), and foreign currency convertible bonds (FCCBs). Financial needs of a business are of different types: long-term, short-term, fixed, and fluctuating. Therefore, business firms resort to different types of sources for raising funds. Short-term borrowings offer the benefit of reduced cost due to reduction of idle capital, but long-term borrowings are considered a necessity on many grounds. The factors that affect the choice of source of finance are briefly discussed below. Cost, financial strength and stability of operations, form of organization and legal status, purpose and time period, Risk profile. Control. Effect on creditworthiness. Flexibility and ease of tax benefits.
I think it was really a good decision to understand from you, because I will never understand by my own. This subject is confusing.
Actually, yes, it is. So be active in next classes.
Yes, sure. Thanks a lot for your time and help.